Hello, my name is Katie St. Norris with St. Norris Wealth Management, and in this video I would like to talk about 5 ideas on how to save on your income tax bill in 2019. Let's get going. Tip number 1. Fund your tax-deferred retirement accounts. You might have common plan like 401k or maybe 403b or some type of IRA accounts. Traditional IRA, SEP IRA, or simple. 401k limits for 2019 are $19,000 if you're under age of 50 and $25,000 if you're age 50 and over. It's $6,000 catch-up contribution. If you're self-employed and you don't have any retirement plan currently, consider establishing a Keogh Plan. You should establish the plan by December 31st of 2019. However, you can fund the account up until tax filing deadline in April of 2020, or if you file an extension, it's October 15 of 2020. Next tip, number 2. This tip for people like 70 and a half and over. Don't forget to take your required minimum distributions, or also known as RMDs. You have to do it by December 31st of 2019. Otherwise, there's a steep penalty of 50% on the amount that you should have taken out, but you forgot for some reason. Good idea is to set up automatic withdrawals for your RMDs. All you have to do is talk to your custodian. It's a financial institution who's responsible for managing your retirement account. This way you don't have to worry about missing RMDs and paying potential 50% penalty. Next tip, number 3, and it's managing your gains and losses for the current year. So when you balance your investment portfolio, and you might have some winners and losers during the year when you sell some stocks or maybe mutual funds. What you can do, you can offset your capital gains with your losses for any specific stocks or mutual funds that you sold at a loss. If your losses for the year are quite a bit higher than your capital gains, you can take a deduction up to $3,000 on your tax return if you married filing jointly, or $1,500 if you're single. If still you have quite a bit of losses left, they can be carried forward into future years indefinitely. And one little tip, make sure you avoid wash sale rule, which is buying similar security within 30 days of selling it at a loss. Then your loss will be disqualified. Tip number 4. Finalize your gift giving strategy. In 2019, you can gift up to $15,000 to any beneficiary, related or not. If you marry and filing joint return, you can use gift splitting and double that amount to $30,000. One thing to remember, that gift must be completed by December 31st to actually qualify for this treatment. Tip number 5. If you're in charitable mood, consider donating to charities. They do have to be qualified charitable entities like Goodwill, Salvation Army, Red Cross. Also, no matter what the amount is, you have to have some receipt If receipt is for the small amount of money, it could be very general in nature. If your donation to qualified charity is $250 to $5,000, you have to have donation receipt kind of like this one that meets IRS guidelines. What are those guidelines? It has to have the date of contribution, your name, address, donation details for item or items you donated, of course the tax year and tax ID for that qualifying entity. Another thing to mention, for $250 to $5,000 gifts, you have to have a statement saying that no goods or services were provided in exchange for that donation. It's very important. And next thing, if you're donating something like a vehicle or something high in value, and it's $5,000 or more, you have to have qualified appraisal done. And to end this video, I would like to thank you for sticking around and enjoy this picture of cute puppies. Thank you for watching. Bye.